All right, guys, it's Max Farrow again from DexFXMarkets.com. We're over on our MyFX book account because what I need to let you know is that you have some work to do now. We have to figure out a few things. The first thing that we have to talk about is how much money you're going to need for this system to be able to work. If you're watching this video after the times that you've spent with StepBot before and our network and everything else, you know that having too little money in your account may end up hurting you. Having a multiplier too high may end up hurting you. And the gains of what any one system can give you are only a pipe dream unless you operate them properly. We know that. In this particular video, I want to just kind of go over how do you address which pair to actually get into and what to work with and how to get your accounts balanced properly for the system that we have. Now, currently, our StepBot system, which only used a handful of pairs before, would use them randomly throughout, maybe one or two at a time. In this particular version, we're using 5 at one time. But we have a $10,000 balance that we have started with to keep it very simple. What we have done is used 5 pairs, Euro JPY, Euro USD, Great Britain Pound JPY, Great Britain Pound USD, and USD JPY. Out of these 5 pairs, each one takes up a reserve of about $2,000 worth of balance for your account. So if you have $10,000 and you're starting with $10,000, then you could trade all 5 accounts. And I'm going to show you how to itemize which ones to trade, not trade, simply by creating disabled sections inside our Dex WB. Now, if you only have $2,000, you're only going to pick one particular pair. That's right, one pair. Why is that? Well, because if you have 5 pairs trading and you only have 2,000, you're going to get stopped out. Something's going to happen. As about a 20 to 25% drawdown. We had a big hit in the beginning. As you see, the September 2nd area had a big drawdown. So you are going to get drawdown. Every account does. Every account loses. Every account has issues. So don't worry about trying to stuff it in there to get a couple extra bucks. I think I'll pump it up this week and I'll lower it down. Just stay true to the course. This is a long-term investment. We're talking 4% a month. May not seem like a lot, but that's 48% a year. You put $10,000 in there, 48% of the year is going to be $4,800. Compound this over a period of time, and the sky's the limit. This may not be, getting rich overnight, but it will be getting wealthy over a long period of time. This is your retirement. It's worth its weight. Trust me. Now, how do you choose which one to take? Well, in the training video here down below, you'll see a link to our portfolio here for the StepBot Signals and StepBot Advanced Signals. So what you need to do is when you get to this page, you're going to come down here to the advanced statistics and you're going to hit summary. And here are the 5 pairs that are trading. Now, as far as I'm concerned, okay, you can trade any one that you want. You can trade all 5. But I look at my profits to pip ratio. If I'm making good profit, you can kind of see that the Euro USD is not doing so well in total, right? That it does well on the buy or on the short side, but doesn't do so well on the buy side, okay? You can actually isolate the variable on not trading the Euro USD at all and only trade 4 pairs. If you got $10,000 and you're trading just 4 pairs, you got some margin, some movement to be able to move around some, okay? So the point being is that pick your pairs carefully. Now, for me, what I would end up doing is that I would look at this USD JPY. If you only have $2,000 to start, I would probably stay there for the USD JPY. It has a low rate. It's only made about a percent on the 10,000 out of this portfolio. But if you got $2,000, that's probably going to get you right around 2 to 3% on your $2,000. So that's not really a lot. 0.8%, it doesn't seem like to be a lot of money, but compounded, it will be. Now, this also doesn't create a large amount of drawdown either because, look, it doesn't have anything in the red. So you could actually pump up a little bit extra on the multiplier with the USD JPY, but you never know what's in store for the future. It's been running for about 3 months at this level, and our statistics show that the USD JPY does pretty well. The more volatile pairs that have about twice the amount of money, they have a pretty big drawdown. The Great Britain Pound USD and the Great Britain Pound JPY are the biggest. The Great Britain JPY is the biggest culprits of that drawdown. So avoiding the high drawdown of the Great Britain Pound and the low expectancy of the Euro USD, I'd probably stay with the Euro JPY and the USD JPY and the Great Britain Pound USD at that point. It seems pretty even and balanced. So probably those 3 pairs. Okay. And how do you go ahead and do that? I will show you in the next video on how to do that. But what you need to decide now is how much money you're going to start, a minimum of $2,000 only using 1 pair, and a maximum, I'd say about $10,000 for all 5. You're going to trade them all. And if you trade, say, 3 pairs and you got $12,000, you could do a multiplier of 2. It now becomes just fun math. All right. And this will take time, but I'm pretty sure you can figure it out. I'm Max. This is Dex. We'll see you next time. And as always, trade well.